This is Martin from Sept, the channel for learning about trading and investing. Welcome to the daily stock market analysis show. We look at what happened in the market and look at how we can plan for the next day. Right. So we had a volatile expiry day today. Is the rally going to continue, or we are going to consolidate, or we are going to move down the channel? Let's look in the charts and see what does it say. Here we go. Let's look at the famous trend line to begin with. We are still inside the trend line. Breakout is not confirmed. Nifty. These are weekly charts. Week has to end tomorrow, so it is possible that it can have a breakout. Right. Banknifty already outside the trend line. The breakout has happened from the trend line. And that's for here. And here we have the daily charts. This is the kind of the inverted hammer, which is an inside bar inside the large engulfing bullish candle, taken the support of the 20 DMA. Inverted candle on a trend up or a down indicates that that's a reversal. Here it's consolidating, so it doesn't make much sense, except that the wick size shows that there was selling pressure today. It was a volatile expiry day today. Obviously it was expiry kind of moves would be there. Momentum has slightly slipped down. So that's about Nifty. Inverted hammer inside. This is also inside by the open and the close is inside. The only difference is that it's attempted to move outside the high of the previous candle. So it's some bit of better performing, more strength is shown in the Banknifty than the Nifty. So this is Nifty. For the Banknifty also the momentum has not slipped. That's the summary we are talking about. So here, tomorrow, Friday, weekend, September 2nd. That's what the analysis for. So it's only a 0.5% or more, 0.6% down that happened in the Banknifty, but 1.2% less last time, 216 points. That's a reasonable correction that has happened. Reasonable give back or retracement, whatever you call, right? So that loss has happened today. That's obvious after such ferocious up move. This obviously happened. Some points has to be given back, right? That's exactly what happened today. Intraday, if you see, it was kind of trending. It gapped down and then it was very volatile. It's expiry day. Gap down, made one V, another inverted V, another V half. It's very difficult to trade. Not an easy expiry. So that's yes, still it's in the DMA support zone. It has not given up the DMA, 20 DMA, 20 DMAs, 100 DMAs, all that. They're still on board the dice without an issue. So market is not corrected comparatively. Comparative to the US markets is what something that you can observe. US market is heavily bearish and it is falling down. Momentum is in the bearish zones, and FI is also not ready to sell, sell, and they're heavy buying, contrary to the global show. So there is some resilience in the market. Trendline channel breakout is not confirmed. We're already seeing that, right? So the levels are to the 17.992 resistance upside. I think 17.98 resistance upside and 18.115 upside. Downside supports. Both are previous swing highs that we discussed. Resistance. Downside, it's a support, gap supports are there at 7,380 and 16,948. It's similar to the Banknifty, 39,760 resistance upside and 40,160 resistance upside after that. So really, supports 38,400 supports first and 37,950 support list. We are talking about this resistances 2 on the upside and this supports 2 on the downside in Banknifty. We're talking about this resistance on the upside too, and this supports that you see on the downside. So, and the 200 DMA is breached until then. So, till 17,000, 16,950, that zone, unless the market goes below that, should be okay. It may be considered consolidation only. And for any breakout indication, it has to go above this 18,000 for sure. Okay. And same with the 40,000 has been cleared, and any retracement up till this gaps about at 37,000 nearby zone should be okay. can be retracements that can, after a rally of nearly 23% on the Bank Nifty and 18.5% on the Bank Nifty. So it should be okay. Bollinger Bands are indicating that there is consolidation. We already seen that. Other day, same contraction is there. It's consolidation, but there is an expansion that's starting. There is an expansion slightly starting on the Bank Nifty only. Nifty also, Nifty, yeah, it's not there. So Bank Nifty, that indicates there is some expansion on the upside, but primarily it's a sideways move that is in daily. Momentum is slipped to the sideways on the Bank Nifty, on the Nifty, but Bank Nifty is intact. Momentum is kind of range. No, it would have been range shifted. It slipped into the sideways zone of the momentum. Bank Nifty is doing a range shift unless it breaks tomorrow. So Bank Nifty momentum is good. And trend is kind of maintaining the bullishness, but it's very weak. Right, so momentum trend still in the bull zones. Volatility flat, sideways, price action. Also consolidation mode. So plenty of supports on the downside. Major resistances are clear. What has to be? VIX has spiked again today, very close to 2090.87, 6.3% of spike. So it is spiking up, spiking down one day 6%, then another day 6% up, down. So that's what is happening since last 2-3 days. Which is why I was a short build up, but long unwinding on the other bearish on the Bank Nifty. That's what happened today. Options wise, data may not be relevant because tomorrow is going to be the first trading day for the next week, September 8th week expiry. But it's a wide 17,000 to 18,000 range and 38,000, 40,000, 2,000 point range is where in Bank Nifty. That's where the highest put and call rating is seen. Put call ratio is also not very bullish. Closed bullishness you can say 0.89 and 0.84 PCR. But again, don't rely on this data unless tomorrow's trade is over. So futures OI and futures not giving much of a clue, except that futures OI today's build up was clear, bearish. Sectoral watch, if you see, none of them performed. Yeah, reality sector performed. Others are all flat. IT heavily fell 2%. Others all percent 1%. So the guys who are the sectors which are maintaining the bull momentum, the short-term bullishness is FMCG auto, and then metal and reality. They are maintaining the bullishness on the short term. Trend, if you see, it's maintaining the heavyweights. If you see, all the heavyweights underperformed today. Lions fell 3%. It's bad. That's brought the market down. TCS, another heavyweight, 2.4%. Infi fell. So both the IT stocks are falling. All the other heavyweights 1 to 1.5% of fall as seen. So all heavyweights fall. ICICI Bank is the strongest. They're still maintaining the momentum. Infi TCS is actually turned to the bear zones. Right? So that's the news about the heavyweight. So it will be cautious about the IT stocks and bullish about the bank, ICICI Bank alone. Others are all still managed. So the FIS data has not come in as it has come in. So it was 2,290 crore of selling that has happened, and 950 crores of buying has happened from the DI. So FIS have sold big, which is not that great. Because they had not been doing that, they had been selling only small, 1,000 to 500. So this is a concern, right? The FIS are now, this is yesterday's data, 4,000 crores of buying in cash market happened yesterday, and today they sold 2,000 plus. So if I was trading and selling is a concern. That's exactly what happened today. Crude is falling, which is okay, which is positive, we can say, below the 90 levels now. Dollar is rising, which is a concern. It's hitting the 20-year high, 109.2 levels. USD INR also very not doing great, but it's falling as compared to the US because some RBI intervention. 79.5 is maintained, below 80 is maintained, but rupee is still maintained. It's at high momentum, and then USD INR currency pair is at high momentum, and rupee is weak. May continue to be weak since long, right? So gold is falling and going to the next support zone. It had slipped from the previous support earlier, and momentum is gone to the bearish zones. SC is flat. US is green. US is also bearish red, and all this you have to see tomorrow. How that you have to closely watch the US markets because they are bearish. Just have a look at the US markets, you'll understand what I'm trying to say. So if you look at the weekly charts, you can see that it is slipping. It has slipped down from the support zone. in a trend line channel. This is Dow Jones reducing. See, this is a very bad bearish pattern, and it can take it down deep to the support zone of 30,000 or 29,000. That can. So you have to closely watch if there is big moves that is happening. So right now you're seeing 200 points on the Nifty futures, which is down. So US market is closely observed. US jobs data is coming today, tomorrow. PMI data is coming tomorrow. So this could impact how the market is going to react. So two long positions, Reality and Bank of Baroda, both are doing good from the momentum and the trend indicator point of view. Let's quickly look at them. See, clear breakout is happening. Right, it's a rectangular box pattern, and it's within a channel, and there's a lot of space upon the channel, and could give good swing opportunities. Reality sector also is doing good. Value sector, that's Bank of Baroda is the next one. It's also in a trend line channel. It is clearly breaking out. Good risk reward. Momentum is good in the bullish zones. Trend is also in bullish zones. Both time frames, weekly and daily, is doing great. So two longs, Bank of Baroda and Reality. So just to wrap up on how the market is. Wrap up on a verdict on the market view. If you see, yesterday everyone had turned bearish because of the big downfall, and yesterday everyone rose back with the ferocious 450 kind of moves that happened. So today it's an inside bar, basically consolidation with a volatile expiry is what happened today. So Nifty has slipped the momentum which is at the end yesterday, back to sideways, slightly slipped, not too much, and Banknifty maintains that, and so trend is maintained, momentum is also maintained just on the edge, you can say, but with weak strength probably. VIX is high and the US market is falling. FIs are, this is a mistake, I didn't see the left right data. So FIs as in selling mode today is worrisome. VIX is rising very close to 20 plus, is worrisome. US market is bearish, is worrisome. But still, the price patterns showing that there is consolidation, Bollinger Bands and indication consolidation. The kind of moves buying from the bottom and all that, indicate that there is a chance that market may not crash down. There are good supports downside. So cautiously, mildly bullish is what my view is there for tomorrow. But you have to closely watch what happens, and their view could change to mild bearishness in case the US market is making a 500 kind of downfall again today. So you have to watch that tomorrow pre-market and then. So that's my view. If that helps you to frame your view and trade plan for the next day in some way, consider hitting the like button, put in your comments, feedback, subscribe if you are not subscribed, and share it to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks a lot. Happy trading, happy learning, happy investing.